Welcome to the Big Skinny. I knew it was coming with Lou Basenese here from our home studio in Brooklyn, where we don't have internet problems. This week, folks, we're coming live in full effect to give you the Big Skinny on the financial news that matters most. Got a guest for you, too, a longtime friend that's going to bring the intel as well. But first, you're probably wondering, if this is your first time, what's the Big Skinny all about? Well, Urban Dictionary defines it as insider information, and we are certainly not that. Love my Florida Gators and their orange and blue, but I don't look good in just orange behind bars. So we're not going to give you insider information, but we're going to crawl right up to the edge to those essential truths, those things that make a difference and make a difference to your bottom line in the markets. And, well, we do it in a pretty straightforward way. I mean, I like to think of us as the Dave Portnoy of Pizza Reviews, but for financial and investment news. So, you know, Dave, he always takes one bite, except it's not one bite. You know the rules. He takes 2 to 3, except for maybe once. So we take a similar approach. We give you one headline that you should think twice about just believing at face value. Then we give you one chart that reveals the data that will give you the truth on that topic, trend, or investment opportunity. And then we end with one insight. That insight, that action that you should take to help improve your bottom line, or at least protect it. So we do that with 3 of the key topics for the week that I bring up. And then we bring on a market guest because, look, I learned this. I talked about it last week. Warren Buffett retiring. One thing I loved about that man, we may not agree on everything politically, but that man was not afraid to be transparent and admit when he made mistakes. So I believe you got to be humble in the markets, or you're going to be humbled by the markets. And I know I don't know everything. So I'm going to bring on guests that can help us understand topics better, more thoroughly, and then profit from them. So I've got my focuses. We've got guests that have other focuses and expertise that are going to help you win more consistently in the markets. All the while, we take your comments. So we're streaming live on multiple platforms. I don't care which one you're on, Rumble, LinkedIn, X, or YouTube. Pop in some comments live into the chat. We'll bring it up on screen. We will, some of you usually use handles that don't have your name in it. So you can remain anonymous, and you can sling as much mud and criticism or ask us our favorite stock tickers or ones that you want us to take a look at. So with that being said, don't be afraid to speak up, cue up the Pat Benatar, and hit us with your best shot. We're going right, the GOAT. Penny Boy Trade Alerts. I think you're talking about yourself, my friend. We're going right to the rundown. This week's 3 topics that should be top of your mind. Guess what? China cried uncle. Can you believe it, folks? We were talking about an indefinite ending to this trade war, mostly with China. And I got to tell you, you've probably read 1 million or saw 1 million headlines today that were telling you that the trade war, we've reached a truce, there's progress, there's not a firm deal. There's one that jumped out at me, and it hits home in a good way. And I think this is just really interesting. You never know what's going to bring people to the table to talk again, whether that's family, friends, or bitter enemies in an economic sense. And this was from the Wall Street Journal. Believe it or not, fentanyl. The fentanyl crisis is what brought Scott Bessent to the bargaining table with Chinese officials. And it came from, at the end of April, if you read the article, they were going back and forth on how they could crack down on the precursors to fentanyl. The U.S. and China were looking for a way to start having conversations, China more specifically, instead of this tit for tat in increasing tariffs. And lo and behold, I love that it came from this, because this means they've got to be serious about it. As everyone knows here, I unfortunately tragically lost a brother, a cousin. I'm one of hundreds of thousands of families that have suffered through the fentanyl crisis. So if any good could come from this crazy back and forth trade war, could be it. So I'm happy to see this. But look, we got to pay attention too. Why did China want an opening to come to the bargaining table, right? Well, if you look at it, it's not because they were selling these tchotchkes to the U.S. and they had to find an outlet for it. They produced too many. Another headline in the Wall Street Journal talks about the bubble blasters and other Chinese goods that are paralyzed by the trade chaos, right? Well, who cares about these bubble blasters and those $6 Temu onesies that you bought for your friend's baby that are now $21? Yeah, folks, I've got an 11-month-old at home, so I think in baby terms sometimes. This was about real goods that have real impact on the economy. And if you look at the U.S., why does the U.S. have to really come to an agreement? Well, believe it or not, it's not just these finished goods that come into our markets. It's actually intermediary products. About 37% of imports from China into the U.S. are intermediary products that we use to produce end goods that we need. So in certain industries like pharmaceuticals, it's upwards of 95%. So there was a compelling reason for the US to come to the table as well for China, because if you look at China, they export to the US. We're their second largest export region. Southeast Asian economies are their largest at about 16% of their total exports, the US at 14.7%. That's a huge amount of exports that just would dry up. There was no one else on this list that could fill up the gap. And that brings us to the money chart for this, really. China could not go on without us. If you look at the net impact of these tariffs, China would be changing their imports from China into the U.S. would drop by 77%. Now, understandably here you see these green, these other countries that China was gonna say, hey, we can't ship all these goods, these bubble blasters to the U.S., we're gonna send them elsewhere, but even there, they couldn't make up the difference. It was too big of a gap to bridge, and newsflash, China's economy, not doing so great. Chinese debt as a percentage of GDP climbing steadily. Just last week on Wednesday, the Chinese government had to implement another round of stimulatory measures for the economy. So China basically, they flinched, they blinked, they cried uncle. Whatever analogy you want to use, they're now at the bargaining table and boom. I like it. I'll take it. We're up S&P 500 3.3% today, NASDAQ 4%. China cries uncle, U.S. stocks go gangbusters. We're moving on in the rundown. So the swinging bull, nice meeting you the other day, Varian Forward. Go follow him. All right, cheers. I like the beers there. It was a pleasure meeting you too. This guy is about that Taylor ham. That's right. I'm from North Jersey. It's not a pork roll. It's Taylor ham. We go by the branding, not the pork roll. All right, well, chime in. You can see everyone's active. This is the Lou Basenese, but one of four, actually. I'm the third. My son's the fourth. And anyway, join the conversation as we work through our rundown. Cybersecurity. Topic we've talked about here plenty of times. I've called it, I think, the forever growth trend, simply because there's just no way to adequately protect against cyber attacks. But lo and behold, this week we catch news that CrowdStrike, one of the darlings of the cybersecurity stock market investing, is cutting its workforce by 5%. What gives, Lou? How can a forever growth trend be cutting back on employees? Well, again, this isn't me imploring you to read beneath the headlines. The reason they're cutting back is not because cybersecurity has suddenly been figured out. They're cutting back because AI is enabling them to be more efficient. Now, here's the key. I said it first. Well, maybe not first, but I said it before this gentleman came up with the quote. It's kind of like when your parents told you to do something and you completely ignored them, said it was stupid, dumb advice, and then someone else told you the same thing and you acted like they were a genius. Well, remember, I told you the problem with cybersecurity is that we'll never get ahead of it. We're never proactive. We're always reactive. And here you have the former CIO for U.S. intelligence community and the CISO at the Bank of America saying, we do a great job of detecting and responding, not so much at preventing. And that's the danger and the trickiness of cybersecurity. You're never going to be one step ahead of cyber criminals. They're always figuring out something new. You close down or clamp down on one vulnerability, they expose another one. Remember, I showed you the multiple areas, the digital attack surface, how it keeps growing. It can come from USB ports, network sites, network applications, company websites, software vulnerabilities. There really is an endless attack area that keeps growing the more data we produce. So boil this down for me, Lou. What the heck does it all mean? It means you got to own cyber. You got to have exposure to cybersecurity, and there's no silver bullet. Remember a couple of weeks ago, I showed you this landscape of all the publicly traded cybersecurity companies that are out there. If you want to play the growth in cybersecurity, you tell me if you can pick the best company out of this list. Is it CyberArk? I don't know. It could be. Is it CrowdStrike? Maybe. What about Palantir? What about Microsoft? What about Checkpoint? I mean, there are literally more than dozens of options here. How about, instead of trying to pick the one horse that wins the race, that you be the house and win no matter who wins the race? And the best way to do that, to capitalize on the growth in cybersecurity, is to own an ETF that holds multiple cybersecurity stocks so that you don't have to worry about picking a loser. The Hack ETF is my favorite, the Amplify Cybersecurity ETF. It was the first cybersecurity ETF. It's dynamically reconstituted with new entrants. and track record is not too bad. So when you buy the dips in this and you get a new cyber attack, this usually rallies very strongly. You look over 5 years, an impressive growth trend that proves, just like semiconductors, cybersecurity has got up and to the right potential no matter how far out we go. Wrapping up the rundown here, what in the world are monkeys, weathermen, and analysts all doing together, you might ask? Well, let me tell you. They're all terrible at predicting the future, right? There's a great Wall Street book, A Random Walk Down Wall Street, where Burton Malkiel makes the key thesis. I'll give you the cliff notes if anyone remembers those instead of chat GPTing it. Burton Malkiel says, look, the likelihood of you beating the market year in and year out is about as good as a monkey throwing darts. You'd be better off if a monkey was throwing darts at the pages of the Wall Street Journal to find stocks. You know what, folks? There are no newspapers anymore, and this is a sophisticated monkey if I've ever seen one. But side note, if you're new to investing or old and forget what important investing principles are, go get that book. It's a great one that will help you understand that you got to invest efficiently in places you can't have an edge and then lean in on those places that you do. So we came up a couple of weeks ago and I said there was all this trepidation over earnings, this earnings reporting season, that no one had cut guidance. And guess what? Analysts were being really negative, worried that companies were going to come out and report results that were less than expected. And if you look at the tracking of this quarter, guess what? We're on track right now for 12.2% or about 12% growth in earnings this year when analysts were this quarter, when analysts were only projecting 6%. If you look at this chart, if there's any orange there, it means analysts missed the boat. The only time they got it dead on was in the fourth quarter of 2022. I don't know about you, but I'm not ready to bet on guesses by the analysts, weathermen, or random monkeys throwing darts. So what's the takeaway? Focus on earnings. If you want to find smart investments, focus on companies that are consistently reporting earnings growth, beating on the earnings expectations, beating on sales expectations, and raising guidance, because stock prices have only one direction to go when you have that trifecta, and that's up and to the right. If you look at the latest FactSet earnings insights, which if you're not following the free research they put out, this is just an unashamed plug here. I don't have any affiliation. I make nothing from it. It's free. They showed the reactions to positive earnings surprises this quarter have been bigger than average because analysts were trying to throw in the towel and say that every company was going to be screwed by these tariffs. Lo and behold, Lou loves shows. I love Lou shows. Yeah, I do too. Stan, my man, it's good to hear from you too. We got to get you a space bar in that keyboard, but I love you paying attention. Going to stock up on my bubble blasters now. Hey, man, you should, because the tariffs are down from 145% to just a measly 10%. So $3.45 is now only just under $4 and change. So get you some bubble blasters, because our next guest is going to bring out a reason to celebrate. But before we get to him and a word from our sponsor, I want to remind you to sign up for our newsletter at thebigskinny.com, where we dish up insights like this, just like this show, more frequently with one headline, one chart, and one investment insight. So if you haven't joined yet, go to thebigskinny.com or scan the QR code on your screen, and we'll be right back after a word from our sponsor. Attention investors, are you looking for a high growth opportunity in the energy sector? Well, look no further than Prairie Operating Co. Trading. I got speech impediments again. Trading on the NASDAQ under the ticker PROP. As America's premier high-growth, low-cost oil producer, Prairie Operating is making waves in the DJ Basin in Colorado. With their recent transformative acquisition, they've expanded their footprint to 55,000 net acres and increased daily production by over 25,000 barrels of oil equivalent. Prairie Operating is poised for growth, maintaining a strong balance sheet while delivering value to shareholders. Don't miss out on this exciting investment opportunity. Prairie Operating, PROP on the NASDAQ. Do your own research. Full disclosure, I'm an executive at the company and completely conflicted, but past performance does not guarantee future results. Consult your financial advisor before investing, but give it a look, and we'll be right back after this short break. All right, welcome back to the Big Skinny with Lou Basenese, and I'm still Lou Basenese. We are back faster than I would want to get out of that Speedo if I had to be forced to wear it. Tune in, there might see a picture of me later in the show. Hey, want to remind you, we are live streaming on multiple platforms. We've got a lot of noise being made. You look at this, Porterhouse, Prop has some nice ranges to trade as well. Paying attention to the ads. Listen, Prop is my day job. I work for them. I went and watched Landman and then decided I needed to be an oil and gas man. Look, Prairie Operating is an under-the-radar oil company. Again, I'm conflicted here because I own shares. But take a look at yourself. 4 analysts have come out with coverage in the last 30 days. Price targets ranging anywhere from $9 to $16. Take a look and chime in with some questions on future episodes. Happy to answer them from an analyst's point of view. Take my executive hat off and answer it there. But join the conversation. We're getting ready to start and talk about trying to trade truce, biotech blues, with someone who I count as a true friend in life. And I don't like to have boring friends. And Marc probably takes the cake for the most interesting friend that I have in investing. Not only, look, you look the part, man. Not only are you a great stock analyst and a contrarian, what people don't know probably is that you're a successful ring announcer. What was the best heavyweight fight that you ever announced? Like, what's in your mind, like you've been doing it for 10, 20 years, right? At least.
Yeah, the best heavyweight fight. The funny thing is usually the best fights are the ones that most people haven't heard of the people in it. But I'll go with Ray Austin versus DeVarrell Williamson. They were 2 top 10 contenders. And the scary thing was DeVarrell Williamson was a good friend of mine and got knocked out. And I was actually afraid that he was going to the hospital on a stretcher. And after the fight, I talked to him, and he was all angry that they stopped the fight. And I said, DeVarrell, I thought you were on your way into the ambulance. Like, what are you talking about? He goes, no, I was fine. I said, fine, you were out. Like where they don't even count.
Yeah, done.
He got knocked out. So as a friend, it was scary, but it was a great fight. And two heavyweights who can bang. So that's always fun.
I love it. You did a piece too, I remember, where you trained for a month to fight, to get into the ring and box too. You're just a brave man, a contrarian, and it carries over to the markets too. So I'm excited to have you on today, man. So I appreciate you making time on a busy day, because everyone's jubilant that the China trade war is seemingly over. But what's your take though? Is this just a pause before the next time we get our horns locked with China over tariffs, or what do you think?
Who knows? Is it a pause? Probably, but I guess let me back up. It's always a good thing when people are talking, right? So that's certainly a positive development. Does it mean that a deal gets done in the next few weeks? Probably not, but we're certainly making progress. And the fact, as you pointed out earlier in the show, that China came to the table, I think is a really big deal, because I don't know how about you, but I certainly was under the impression that, China has this long, very long, like generations long view of their approach to the world and their approach to world domination, and that they're okay with taking a bunch of pain for a lot of years in order to have that domination 50 years from now, 100 years from now.
No,
and
you're
the
absolutely
fact
right.
that they kind of acquiesced, or at least came to the table so quickly, kind of changes that impression a little bit. So I think it's a big deal.
Yeah, I agree. I always say that, China, like you point out, thinks in 50 to 100 year time periods, where the U.S. thinks in election cycles and midterm elections, and companies think in quarterly cycles. So big deal there. How have you, I know you're very, look, you're like me, you're specialized in certain areas, but can trade the markets, or a generalist. Like, how are you handling the volatility around all these trade wars? Where were opportunities that you successfully exploited because of all this volatility, and where do you see things now? Like, after this happens, where's the opportunity in your mind?
So a couple of ways. As a dividend guy, anytime stocks sell off hard, I get very, very interested. You get those pops in yields, and as a dividend player, you're not too worried about the short term. You're investing in these stocks for, 5, 10 years or longer. So if I get in a little bit too early, that's fine, as long as I'm happy with the stock at that valuation and that price. But I'm also, when that increase in volatility, was a great time to sell options, whether you're selling covered calls, naked puts, or other strategies. Just what a gift anytime the market really has some big issues and volatility explodes, you can make some really good income selling options.
Yeah, no, that's a good segue too. Last week we had Austin Wynn from Penny Boys Stock Alerts. He strictly focuses on options in a lot of his team, and that's not an area I spend tons of time in. But volatility is your friend when you're trading options, especially for earning premiums, collecting income. I forgot to mention. You bring it up, dividends, right? You're bringing sexy back to boring dividend investing. I'm going to give you that credit. You're also your book. It's in the 3rd edition now. Get Rich with Dividends, and then your second book, New York Times bestselling. You don't have to drive an Uber in retirement. If people haven't read it yet, or if you need graduation gifts, it's that time of year. I'm going to make the full-on endorsement here that you should go out and get a copy. It's even been translated in Japanese, so you are that guy. That's a big deal in Japan too.
Yeah, Poland and Thailand too. So I can't walk the streets in Gdansk, Poland either. So.
Well, hey, I got a question for you. You started out at Avalon early years ago, very contrarian shop. Biotech, very contrarian right now. I've been biotech and small caps. I've been that guy banging the table going, this can't last forever. Someone cry uncle, rally, please. What do you think? Small caps, biotech, blues, are they over anytime soon?
Yeah, I don't see it. It seems like there's
guys, to break. We're out. That's it. Yep. We're former friends. We're not going to be at the table talking anytime soon.
Yeah, I wish there was reason. And look, certainly, some individual stocks here and there might end up with some great data readouts and what have you. But I think as a sector, there's just a lot of headwinds, including, what's happening with the federal government. Slashing research, slashing funding in academia, and now this today's executive order where President Trump is talking about perhaps 80% lower costs for drugs. I think that's today the sector rebounded along with everything else, but I think that's going to put a real ceiling on prices and valuations until this gets sorted out and we know exactly what that picture is going to look like.
Do you think, though, considering the average biotech, for it to go to preclinical studies to actual FDA approval, unless it's in cancer, it's 7 to 10 years, right? It's just to get through that process. Do you think the market just says, you know what, this pricing pressure potentially is just too far out there, we're not going to worry about it? Or do you think it's something that hangs over the sector for the rest of the year until you get clarity?
Yeah, I think it does hang over the sector because like I said, a small biotech that has a great data readout, perhaps that goes counter to the trend. But, if we're talking about the Amgens and the Gileads and the AbbVies and all the big names who perhaps don't know what prices they're going to get for their drugs now in the United States and overseas, if those names have a big ceiling on top of it and those stocks can't rally, I think it's going to be tough for the whole sector, other than perhaps those individual stories here and there.
Yeah, no, I think I agree with that. I can see that the opportunity set gets compressed into those smaller names that aren't generating revenue, right? Let someone else figure out the pricing. So, that does still, all right, we're still friends. You're not completely bearish on biotech.
But you also have to wonder, even that company. So if you're in phase 2, and you're still 5 years away from launching a commercial product, but if they have no idea what price they could possibly get, because historically perhaps a comparable drug was $50,000 a year, and now there's a lot of uncertainty. Again, I don't know where the market values that stock even after a positive data readout. So I think we need to see some certainty on pricing before this can shake out. And once that happens, I think there'll be a great buying opportunity. But I do think this uncertainty is going to keep a lid on things for a while.
Well, you got to message me when you think there's a great buying opportunity so that we're in full agreement. So where else are you finding opportunity right now? I know you're getting ready to host a special event and I believe it might be on options strategies, but I'm not sure. You tell me, where are you finding opportunity in this current market that people should be paying attention to?
So yeah, as you mentioned, I'm hosting an event on Wednesday about option strategies. I love options right now, especially selling them. We always like to buy calls and swing for the fences, but we know those are super speculative. So as the income guy, I like income. I like generating income on a consistent basis, and that's what selling options can do. But other areas as well, I like one of the areas that you're in, oil. Oil's been so beaten up.
I knew I
Actually, have a
liked this
new
guy, guys. I knew it.
I have a new recommendation coming out in the Oxford Income Letter, I think tomorrow, in the oil sector. Just, anytime a stock has been so beaten up or a sector's been so beaten up and it's a dividend rich company and sector, that's going to grab my attention real quick. And when you can find catalysts, not just praying and hoping that oil prices are going to rebound, but specific catalysts to
Yeah.
that company. So I think oil is going to be a good place. Perhaps not in the next few weeks. I mean, maybe we rebound, but I think long term, oils. You're going to be glad that you bought oil stocks today.
No, I agree with you. I mean, we were just at the same conference presenting, and I had a breakout with people, and I said, "Look, I'm not trying to get you to buy Prairie today or tomorrow, but pay attention to the energy space because it's the cheapest it's been out of all, and it's the cheapest out of all the sectors in the S&P 500. It's completely underweighted, and watch what happens. Right? We saw oil rebound, very quickly today, back to it was 63 at one point today. We were down in the mid 50s not long ago on all this stuff. So I agree with that overall thesis. Forget being biased towards Prairie. I think you got to be exposed to the entire sector. Like that's just
Absolutely. And even even when we saw oil prices really getting hammered a number of years ago, as far as the dividend payers, the big names, they're still paying their dividends.
Yeah.
They're perhaps their profits aren't doing great. Their stock might have been going down a little bit, or more than a little bit even, but they were still paying their dividends. They were raising their dividends. So if you're a long-term holder in these kinds of companies, when when oil prices come down, man, several years later, you're doing absolutely great if you're buying. Anytime I think you buy oil stocks when oil is in the 50s and lower, you're going to be just fine.
Yeah, I mean, I think on an inflation-adjusted basis, I mean, oil's actually cheap, right? Like 50 should be 65 to 70 if it adjusted for inflation for everyone else in goods. But hey, I want to make sure we bring up that QR code on the screen because that is the landing page to sign up for your special event, how to trade with options. There's the book to get. I want to leave that on the screen while I ask you one final question. How much do you love me? No, I'm just kidding.
A lot.
No, man, I love you too. Not like that much. The Fed, what do you think is the next move for the Fed?
I think they're going to really stick to the data. I think Jerome Powell really does not want to be seen as someone who can be pushed around. That being said, if the data says that he should lower rates, I don't think he'll hesitate. But he's got a year left on his employment, probably not coming back after 2026. So I think he wants to kind of prove that he's his own man, and he'll do what the data suggests he should do.
Cool, man. Listen, we got a couple comments. I want to get to them before we let you go. I know it's 5:30 on a Monday, but on oil, seasonal demand and geopolitical instability will disrupt supply again, plus any sniff of rate cuts will be crazy. Agree? Disagree?
Sure, absolutely. I mean, there's always potential catalysts in oil, including political instability. All it takes is OPEC to cut back on production. I mean, we know that they just agreed to increase production, but all it takes is for them to reverse that, as well as all the other instability. I mean, there's a million reasons to like oil when it gets cheap.
No, clear production. You hit on it from OPEC. Totally agree here. Penny Boy Trade Alerts. We'll come back again. Oxford's a great trading club. Love my man Russ over there. You guys got it all figured out. Let's check out Marc's special event this Wednesday. And man, I love seeing you in person more than I do on screen here. It was good to catch up with you and your lovely wife this past week. Look forward to having you on again if you'll come on again, man.
Absolutely. This is the best investing show I've seen in a very long time. So congrats on doing a great job. And I can't wait to tune in every week.
Unsolicited, that's going on the website. My friend and fellow contrarian analyst, Marc Lichtenfeld. Enjoy the rest of your Monday night, my buddy. We'll talk again soon. And folks, we'll be right back after a quick word from our sponsor. Hey, here we are, waiting for our sponsor, Butcher Golf, fully custom really fast. Are you looking for top quality, fully custom golf polos and lightweight quarter zips? Well, we got you covered. Take your brand, promotion, or special event and bring it to life with full cut and sew customization, starting from a blank canvas. Order as few as 25 for your next family reunion, or as many as you can imagine to sell wherever it may be. Delivered to your door, get this, in 21 days or less. Butcher Golf, fully custom, really fast. Visit butchergolf.com today. We'll be right back. Welcome back to the Big Skinny with Lou Basenese. This is the time of the show where we like to, maybe make fun of those prognosticators. Earlier in the show, we talked about weathermen, monkey, and analysts. Everyone likes to think they have a crystal ball, but this is a segment of the show where we help you sort through the noise and make some predictions of our own, but screw the crystal ball. We've got a Ouija board. It's Luigi time, where we're going to look ahead at this week's market-moving events and acknowledge the fact that there are just so many each week. It's impossible to track them all, let alone understand which ones are most important. So we want to whittle that list down. I mean, if you look at the list of reports this week, it doesn't even fit on a single screen. Go to MarketWatch or go to Google and type in economic calendar this week, and this is all you get. I mean, you probably can't read it. I'm, pushing 50. I need glasses, man. But there's CPI and PPI and consumer sentiment and other PPIs in there and Fed speak. And look, you got to boil it down. Not all of these things are going to matter for the markets this week. So what does? It's really the Fed and inflation, right? We're getting CPI, consumer price index, and PPI, producers price index. We need confirmation that inflation is cooling. And this is going to be the first reports. This is key. This is why we're focusing on inflation first. This is going to be the first set of reports that has any type of impact in them from the tariff and trade wars. So we're going to get an idea of, did prices really go up? Were companies able to avoid price hikes by, one, just absorbing the hit, which traditionally, the media will not tell you this, but traditionally companies shield consumers and absorb about 50% of the price hike. But could they shield it all? Were they able to buy enough inventory ahead to hold off on hiking prices for a quarter? Maybe. We'll find out. That's what we got to focus on. It's really key, this inflation data, even though CPI and PPI aren't the Fed's preferred inflation indexes. We can do a whole economic boring lesson on that, why it's PCE and not CPI and PPI, but don't worry about that. All we want to know is what's the trend. Is inflation still cooling and coming down closer to that 2% target market? The problem is everyone thinks the outlook is at 6.5% a year out from now. So you have high expectations for high inflation, which will keep the Fed stuck on pause, if anything. And this is funny. If you look at the Fed fund rate probability, Fed Market Watch tool now, for the June meeting, it's now about 90% of people think that the Fed is going to hold pat. Guess what? 30 days ago, that was at like 30%. I've been one of the lone contrarians on this camp and making this point. Kenny Polcari, a guest a couple weeks ago, what's cooking with Kenny, agrees that the Fed's not going anywhere anytime soon with rates, not lower, not higher. They're going to stand pat. And I think it's going to be until September. And now the market is waking up to that. And that's a good thing because I agree with Mark. The Fed is going to be data dependent. Jerome Powell is the Rodney Dangerfield of the financial world. He gets no respect because he screwed it up on the front side, but he's getting it right on the backside. And the data just doesn't support any cuts yet, no matter how much the president or investors are wishing that we could. Powell coming up. Yep. I mean, that's a little chickly. Yep. Here we go. Keep joining the conversation. We got funny noise effects here, folks. We're just innovating every week. Join the conversation, Mario Brothers. Let me get that extra coin. Maybe there's a growth mushroom here. From Penny Boy, interesting seeing the businesses that are listing the tariffs on the product so the consumer can feel the increase without blaming the company. Look, I think we all love transparency, right? I think companies should do this in more instances when it's not just tariffs that are causing the prices. Hey, we made bad mistakes. We had to overpay certain employees. Our CEOs overpaid. I love the transparency. I think you're going to get more of that moving forward. You're seeing that with expectations, guidance. Companies aren't necessarily cutting it. They're giving two versions. This is a no impact from tariffs version, and here's the impact from tariffs. So again, what matters in this week ahead? It's really inflation, and then it's the Fed. What's the Fed? We got a couple Fed speakers coming out at the end of the week, and think of this. The next Fed meeting is next month. The way the Fed intervenes in the markets, it's called verbal intervention, right? When they're not going to actually move interest rates, they start talking about it. They start talking about being data dependent, or if they feel the need to ease and give people false hope or some hope, yeah, we'll cut rates if if inflation continues to cool. So again, if you pay attention to nothing less this week, pay attention to inflation numbers, the Fed, and there's some earnings coming out, Alibaba, but we'll talk about that later on. So thank you for joining the show. Be sure that you're signed up for our newsletter at thebigskinny.com. You can scan the QR code on your screen or just go to thebigskinny.com, and don't forget to join the conversation because we're coming right back after another quick break to cover things that matter in the market, including some specific investment recommendations. And we're bringing my fellow partner back into the mix, the Dodd man for the D block. So that being said, hang right there. We're going to be right back. Business moves fast, and so does search, especially now with AI transforming how customers find you online. If your business isn't optimized for AI-driven search, you're missing opportunities every day. Incend Media is more than marketing. They're strategic growth partners using advanced answer engine optimization, cutting-edge SEO strategies, and proven business analytics to help your company generate new leads, attract more customers, and solidify your brand's presence. In the era of AI, visibility equals profitability, and Incend will ensure your business stays ahead. Visit incendmedia.com today, and don't forget to mention the Big Skinny to get your free SEO performance audit. With Incend Media, your growth is just a click away. We'll be right back. We're back at the Big Skinny with Lou Basenese. Welcoming my man, the Dodd, to the Dodd block, who's nursing some leftover Cinco de Mayo beers, I think. Is it a Dos Equis? Yeah.
Oh, yeah.
Look at that,
Good
my
stuff.
friend. Hey, it's always a pleasure to have you on. Apparently, we got the theme here, Tecate. And there's a light down, folks. Mayhem in the studio. Everything is unpredictable.
It's all going in crap.
Hey, listen, last week it was the internet. I couldn't see a thing, so I appreciate you sticking with me, folks. And we're back up. Dodd, what are we talking about this week? Because, what I love about you, and people are always like, I love the Dodd block, because Dodd is just, he shoots straight. He's the everyday man, not everyday woman sometimes, that just asks the questions like, hey, Lou, that made no sense, or what about this? So really, what are we talking about? Was there anything that Mark brought up that you think we need to clarify because we got too much into a financial geek speak?
I got a couple things actually, Lou. First of all, I have a complaint again. I know
Always
I
complaining.
feel like
We need a sound effect. Wah, wah, wah.
I'm getting a little tired of you starting the show each time with this my orange and blue thing.
That's right. My orange and blue because my black and gold UCF.
I'm really tired of this, though. I've asked you several times, can we change this up? So, obviously you can't do it. So I got a little creative and I got a couple ideas for you.
All right.
So, you talk about we're not going to end up in orange jumpsuits. So I was thinking instead of I love my orange and blue, you can say something to the effect of like, I love my Kool-Aid orange PJ pants, but I don't love an orange jumpsuit. Or, or
Yeah,
I love
no,
me
nice try,
some
dude. Listen,
orange gummy bears, but I don't love an orange jumpsuit. Can you mix it up a little?
now DEI is dead, and so is being nice to the Knights. So win, and we'll give homage to the Knights. The
All right,
reigning
man.
champion Gator basketball team gives me bragging rights. What are we talking about, my friend, besides football?
Well, I do want to talk about. I feel like I got a gut punch when Mark was on about the biotech blues.
I
With
know.
him not feeling very positive about. I guess he kind of said that later on, they'll come back, but not in the near future. So made
No,
me feel a
look,
little better.
I'm going to make you feel a little better because he did say that those early stage promising companies that report really good data will be rewarded. And that's what you're seeing in the market. Thanks, Stan. Great show. I love you tuning in. Let's go. Love this guy already. Look, the feeling's mutual. We love you chiming in. Biotech, though, look, I've been banging the table on it. It's undervalued, underweighted, unloved, and there's a lot of great companies putting up good data. So I think that's going to continue. You're seeing that trend. You're seeing these names get big deals with big pharma. It's the more mature names that have revenues that have to worry about, are those revenues going to get compressed because of the pricing control? So I think it's going to be a bifurcated market. You're going to have on the top end, the big guys are struggling until there's clarity, and then the little guys, still plenty. One that we both love is hosting an investor update call right now, Q Biopharma. We'll report back on that next week. So yeah, I mean,
So you're feeling more positive, is what I'm hearing.
I'm feeling more positive overall. Like, yes, there's been tremendous cutbacks at the FDA, but there's also a mandate to move faster to approve drugs, to improve that process. At the same time, there's drug discovery platforms that are using AI to get there quicker. We're seeing that with Gain Therapeutics that we brought on before. We had the CEO there. I just think you're going to see those things come together and coalesce at the same time and really lead to some big winners between now and the end of the year in the biotech market. So stay tuned because we'll be talking about more of those for sure.
What about new investors? As new investors, looking, biotech, small caps and things like that? Because usually, small caps and are opportunities to get in at, lower pricing. Is that, for new investors? What do you think?
Yeah. 3 deep breaths. Where are you focusing? First 3 steps as a new investor. I think this is a great comment.
Oh, well, look at that.
Yeah, look at that. You just were reading the minds. The Ouija board was working. You anticipated. Look, I think as an investor, 3 first steps. 1, decide to invest, right? You just have to do it. I don't care how much or how little you make, how old or how young you are. I mean, Warren Buffett is an amazing stat. Didn't earn most of his wealth until he was 65, right? So just start. So new investor could mean you're old, but you're new to investing, or it could mean you're young and you're new to investing. Start, actually do it. Do it with consistency. Set aside 100, 1,000, whatever it is, and with faith each month, just like you pay your cell phone bill, invest in an account. Put that money in an account. If you don't do anything else, even if you just put the cash in there to future invest it, I think you can do much better than that, but just to have that discipline. And the third thing I would say is don't go chasing returns. Don't look for the quick return. No one gets rich quick on Wall Street except for some crazy crypto bros who then go broke, right? So I think it's decide to invest, and then do it smartly. So that book, A Random Walk Down Wall Street, talks about anywhere the best place to invest is in ETFs now. It's low cost. I think you do an asset allocated, diversified ETF portfolio. And if people are interested in this, let us know. We can put together a model portfolio. I know you have younger daughters that are now into their professional careers. It's an easy way that you can buy in really small amounts, a diversified portfolio. And then the 4th step I'll give you is once you get those 3 things down, is then you take about a little bit, 10%, 10 to 20% of that, what you've been investing. 80% goes into the asset allocation ETFs. The 10 to 20% goes into the things that we talk about, small caps, biotech, emerging technologies, because those are the ones, and option strategies too. We're talking about it here. We have a trading guru in our midst that is behind the camera here. Taylor did a great option trade on the VIX. So there's ways to turn 150 into a couple $1,000, but you don't want to be doing that with all your money, right? It's the little bit that turns into a lot. And if it doesn't work out, which the averages are, it won't more times than not. You're still not ruining your investment. So Greg, well, I don't know why I called him Greg. Good old buddy George here. Love more info on the ETFs. We'll make sure that we do that, provide a guide. Anywhere that provides exposure to Alzheimer's dementia treatment is $1 billion moonshot. Sava, for example, I'm not familiar with Sava. I know there's a few others, Immune Bio and then Gain Therapeutics. So there's 3 names out there that we should check out. Management and data can destroy that future, though, so be cautious and diligent. Yeah, this is a great point for Penny Boys. The only thing that kills biotechs, 2 things: bad data, not enough cash, right? That's it. Those are it's a very straightforward way to look at the risks involved with biotech. So those are 2 things that always undermine a biotech. They need more cash and they run out, or they got to price some really ridiculously dilutive offering, or the data just doesn't work. So that's why you really don't want to invest in companies that have only one drug in the pipeline, kind of one-hit potential wonders. It's too binary. But we can talk about that at length when we, get outside the first 3 steps for investors. So great question from our viewers. Be sure to keep them coming. Comments, questions. We're here to help and inform as best we can. Speaking of which, what else we got to talk about today? I know this high five here, right?
I think we got the high five.
I know.
Where's our intro? What are the boys doing over there?
They're too busy listening to us.
Here we go.
I get stuck on the
Keep asking those questions, man.
I'm on the slow pad. You're standing on the road.
While I was out there, filming our TV commercial on set, and you were in studio. There's some benefits that I get too as the spring intern. So
it is, man. All right, high five in it. What are we talking about?
All right, you tell me, man. Let's see. What do we got here? Working 9 to 5. I'm gonna guess that Trump is calling Dolly Parton to be next Fed chair or something.
Dude, that would
Am I right?
That'd be hilarious. I mean, that actually, I wouldn't put it past him, but it might be a nice insult to Powell to convince him to move. No, I'm talking about jobs. We talked about it, I think, two shows ago, how jobs are the key, right? We've got to look at inflation for the Fed, and the other side of that coin is jobs. If the job market collapses, the Fed's going to be forced to act regardless of what's going on with inflation. If you look at Yahoo Finance, the last jobs report, strong growth across the board. This was the first jobs report. This will be the first inflation reports this week that included any impact from tariffs. All looks good. Stocks love jobs. The economy's still churning out jobs. I think everyone's working 9 to 5. More importantly, look at that bottom. Government jobs did not increase. That's Doja at work. It's even happening in the municipal and state level. You're seeing a cutback and a focus on efficiency. So as long as jobs stay there, we're in good shape.
All right, let's hope they stay. GDP pump and dump. I remember my wife doing this when we were having kids after a night of good drinking. Or is this a celebratory night or a morning?
I did not know where you were going with that, my friend. Yes, breastfeeding. You got to pump for those people that don't have kids. You got to pump the breast milk so that you don't get the alcohol.
Are you going to explain it all?
I mean, with you, yes. I mean, you can bring these things up. So GDP pump and dump. Here's what was happening prior to today, right? We didn't know for sure we were going to get this news on China. Huge revisions downward for GDP, right? Expected. We saw this weird print for Q1 GDP for the United States because of all the inventory building. This is like the gator chomp. Sorry, I can't bring it up, dude. I got to bring it up. If you see GDP, the green drop to down and to the right, and then you see inflation ticking up on the top, that's the worst possible scenario. It's stagflation, right? You get a weakening economy, but rising inflation. That renders the Fed pretty much impotent to do anything to have an impact on it. So thankfully, the consensus was forecasting stagflation. I think with resolution in China, or at least a 90-day pause, we're going to get back to the economy growing really well and at least solidly, and we can avoid the stagflation cocktail that we had.
I think that looks more like a knight's sword, by the way. That's not a gator chomp.
Dude, it's a gator chomp. Pookie's Revenge says he's glad you're back and that you were promoted from intern. He's not been promoted yet.
Dude, when do I get my promotion? I'm still hoping to stay on another semester.
We're putting this out to a survey results, man. We're going to leave it to the people to decide whether or not you keep your position. So keep those weird comments about breast pumping and dumping to yourself. Actually, keep your crazy crypto coins to yourself. I'll take the other one.
Okay, small cap hate. I feel like small caps are the punching bag again.
They are. Look, hate crimes are crimes, and there's one being committed against small caps right now. The most short interest we've ever seen in small caps, and gosh, I mean, going back 3, 4, 5 years right now. So again, the contrarian in me, when everyone thinks alike, everyone is likely wrong. The great quote from Humphrey B. Neal, another book, The Art of Contrarian Thinking, everyone should check out. Everyone's thinking alike that small caps are doomed. Part of this, really, the large part of this, is they've underperformed for so long relative to large caps, and you saddle them with tariffs, and these small businesses are going to struggle. I think you're seeing light at the end of the tunnel here. The Russell was up at one point, I think 6% today. So Russell 2000, I don't know where it closed, but there's light at the end of the tunnel for the small cap hate trade, right? Take your haterade and get out of here. The small caps will rise again. These are the engine of economic activity in the U.S. 70% of job openings are in small cap companies, small companies in the U.S. Small business drives its economy. Now that we have a clearer path to resolution, I think small caps are going to become great again and win the day, always. And look, this is getting back to beginning investing. Small and micro caps are the only areas in the market where individual investors like us actually have an advantage over Wall Street. So why do I pay so much attention to small caps? Because when they work out spectacularly well without having Wall Street participate. We're selling to Wall Street and the main institutions. I mean, you remember our good old trade in Prevention Bio that we're buying for $2, $3, $4 a share, and it got taken out at $25, $26 a share. That doesn't happen, all the time. And yes, you get your Palantirs and your Nvidias, and they get crowded trades. But you're just betting on momentum in those cases. In the small and micro cap space, you can actually bet with an edge. Prevention, we knew the data was great and was going to get approved. So we can bet with conviction. So small cap hate, I expect it to turn around into love before too long.
Well, I hope you're right, brother. An XBI apology.
Let's bring up the chart here. Remember a couple episodes.
You making us look bad again? What's going on? You might have to chug your beer.
I know. A couple episodes ago, I thought I might have to, right? This is all about being humble. I mentioned NXPI right ahead of earnings, that it was undervalued. It usually doesn't trade this low of valuation. The range is like 12.93 times forward earnings to 27 times, and it was at like 13, 14. And then the next day they came out, reported earnings, and it was a little bit weaker than expected, and the stock was down like 7 or 8%. And I thought we were going to have a mea culpa here. I'm sorry that the stock didn't work out. But then the market just regained its senses. This is just too undervalued of a company. Today alone up 20%. So I think when we were talking about it, it was $170, $170 a share. I still think there's plenty of room to run here. So this is one of the under the radar AI plays. That a bigger one though, for what's the market cap before I speak out of turn? I don't have it in front of me, but it's a much bigger company. Yeah, 52 billion. I wanted to say 40 billion, but after this move, it's increased. You're not talking about a multi-trillion-dollar company like an Nvidia that you're trying to double from here. This is a company that can still double. It's got diversification throughout the chip sector, not just AI. A lot of automotive exposure, which is a positive thing. If you look at how many cars now have so much more electronic components. My mom actually just bought a car for the first time in, I don't know, 7, 8, 9, 10 years. She bought the same Kia Tucson that she had, and she's like, it's amazing. It's all like digital now. Like, she thought she was buying the same car and then realized that she was getting a computer that had 4 wheels and drove her places.
Yeah, hopefully it doesn't break, because that's where it gets expensive with all the computers in there.
Yes, this is true. But anyway, NXPI, no apology necessary. Still an undervalued chip name that I am a full disclosure shareholder, but would be buying more on dips. Ring the register, baby.
Buy, or buy. You've been really banging this boy band thing again. This Mag 7, what are we doing?
No, listen, it's, there's continued pessimism in the markets about whether we can believe in the staying power of this rally. People want to usher in different data points and say like, well, this happened, when Jupiter was aligned with Mars 33 years ago, and it was a bad omen because it was the death cross plus, a Republican president, blah, 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 blah. Like, they're just searching for a reason to be negative. If you just focus on the earnings, they're positive. Stocks are going higher. So even after this rally, if we look historically, people are saying too far, too fast. NXPI Leaps it is, leaping into it. If anyone doesn't know, we talked about Leaps last episode. Leaps are a very cost-effective way to get long a particular company. These are long-dated options. So back to the earnings. Look, it's not buy as in the boy band. It's buy in terms of Jim Cramer. Like, hit the button. You should be buying things that are undervalued in this market even after these recent moves. I think you'll be handsomely rewarded in due time.
Awesome.
So that's all I got. Unless we got questions.
All I got, brother.
Yeah, that's all you got. That's all I got. We got any? Well, we got more. Stock Buddy just flagged buy an XPI in the weekly. Just reclaimed trend 2. Very interesting. See, folks, this is what I love. We have informed investors. The PDUFA schedule. All right. Well, I'll get to you in a second, Pookie. We have informed investors here. This is about collective wisdom, right? We bring on guests. We want to attract viewers that can add value for all of us. So again, looking at the charts, looking at technicals, Austin was really good about articulating how technicals can be your friend, how you can use those for trade setups in the markets. That's not something I focus on tremendously. You use multiple resources to become a better investor. You listen to us, you get into their groups, and then Pookie just, God, how much did you pay him,
Thanks,
dude?
Pookie.
Where's your Venmo? Like, do you have yours public? If I see it, it's going to be like Dodd to Pookie's Revenge for nice comments, you know? Yeah, so.
Yeah, absolutely, man. I need all the positives I can get so I can hopefully keep my internship.
Yeah, so I agree, but let's end here on a question or statement from Pookie that I want to emphasize. PDUFA dates. This is the date the FDA says they're going to decide whether to approve or not approve a drug. The FDA historically, just like any government agency, takes every last minute and then some. These are great trade setups, particularly with options, because if it's a yes answer, the stock usually rips. If it's a no answer, it craters depending on how big the company is. If they have a lot of other drugs approved and revenue, not as much impact. But a great way to look for trade setups is look at these PDUFA dates. It's a calendar that's out there. It's usually, the FDA gives a PDUFA date 6 months out when they're going to make a decision. You can trade around it, and it sounds like if you want to speak English, if you want specific trade setups like that, it might be worth checking out Penny Boy Stock Alerts because Pookie's on the scene and on that topic as well. Yes, fundamentals tell you what, technicals when. I like that. It's a good way to put it, right? I always say that enough people pay attention to technicals that you have to because it is giving you the direction and trajectory. I look at technicals after the fundamentals. There's some people that just look at the technicals. A purist would say, I don't care if you give me the name of the company, I just show me the chart and I can just predict. Yeah, I just don't buy into that fully. But I will double thumbs up. Fundamentals tell you what, in fact, technicals when. Tongue-tied Lou Basenese is wrapping it up here at the Big Skinny with Lou Basenese. Episode 9, back in Brooklyn, in the books. Thank you all for tuning in. Tell a friend about Mr. Dodd, and join us back here next Monday, 5 p.m. Eastern, live from Brooklyn. Lou Basenese signing off.